Welcome back, and in our top business story, Dubai's Islamic asset management sector has huge potential, and the Emirate can become the global hub for Islamic asset management if it is able to drive greater innovation and diversification in the sector. That's according to the latest report. The European Islamic Investment Bank report states that Dubai's Islamic finance sector is well positioned to seize a better opportunity, with the size of the global Islamic asset management poised to grow from $60 billion to $185 billion. The report, titled Dubai, a global hub for Islamic finance, highlights, however, that despite its huge international potential, the Islamic asset management sector remains greatly underdeveloped. The report added that investors in the GCC increasingly demand more sophisticated Sharia-compliant savings, pensions, insurance, and mutual fund products. They wish to diversify into a range of alternative and fixed income products, as well as diversify geographically. It added that there is now a crucial need for the creation of a GCC-wide pension fund framework. The study also recommends a series of measures to accelerate growth, including an initial public consultation between fund managers and authorities to identify ways to incentivize the creation of multi-asset class, multi-geography funds. It also calls for the UAE's state-owned savings institutes and sovereign funds to establish working groups and to also transform the way they interact with and appoint private sector asset managers. DP World is in talks with Yemen to help rebuild their maritime and trade sector, as announced by the Dubai-based port operator. His Excellency Sultan bin Sulayem, the chairman of DP World, was quoted as saying that we are exploring areas where we can help our near neighbours in their initiatives to restore critical marine and trade infrastructure at Aden, and look forward to developing our discussions in the immediate future. According to the report, a delegation from DP World and Jebel Ali Free Zone will visit Yemen next week to look into areas of assistance. DP World exited Yemen in 2012 by selling its 50% stake in the company managing the container terminal of the Port of Aden to its joint venture partner, the Yemen Gulf of Aden Ports Corporation. The UAE is funding the building of schools, hospitals and other facilities in Yemen, and has also raised 808 million dirhams in public funding. Job creation growth in the private sector in Dubai fell to a 3.5-year low in September this year. That's according to the latest economy tracker by Emirates NBD. The data revealed by the Dubai-based bank shows that business activity fell from the previous month, but signaled an increase in business activity across Dubai's private sector economy. It was mentioned that after more than 5.5 years of continuous expansion, the growth index registered 56 last month, as compared to 57.6 in August. The chief economist at Emirates NBD, Tim Fox, was quoted as saying that while there was a slight slowdown in the pace of expansion in Dubai's non-oil economy, the pace of economic activity remained robust, particularly in the construction sector, which accelerated to a 4-month high. He added that as a result of the slowdown, private sector companies were cautious in terms of their staff hiring in September. However, the data shows that growth of business activity remained faster than July's 40-month low, with construction output rising sharply, while the travel and tourism sector experienced only modest growth. The September data also showed that wholesale and retail firms outperformed the all-sector trend in the same period, with business activity rising at the steepest pace since April. By 2019, tourists from the GCC are set to spend $73 billion. That's according to Dinar Standard Strategy Services. Industry experts added that hospitality and retail will be two of the Middle East's faster growing sectors for technology. And the Dubai is forecast to see strong growth, with the Dubai Department of Tourism and Commerce Marketing projecting 25 million visitors for the World Expo in 2020. It was added that the MEA's audio-visual market for hospitality and retail is set to reach $782 million by 2016, up 65% from 2012. In the UAE, hospitality will be the country's fastest growing audiovisual segment at a compound annual growth rate of 17% to 2016. Additionally, spending by tourists to the UAE grew by 5% during the first quarter of this year, compared to the same period in 2014, which were drawn from credit or debit card transactions. According to a study, American tourists spent the largest amount in the country, amounting to 21% of the overall tourist spend in Q1, while tourists from Saudi Arabia were the second highest spenders, accounting for 12%, followed by visitors from the UK, then China, and then Kuwait.